That's not nice, Spider. Crazy price action on the 205 candle for Twitter. Is it still just trading at the same price though? It's lower. Everyone's buying for $54 and it's never gonna see it. Think about it this way. If you'd bought shares last Feb at like 50, and say you only had enough money for like 10, right? So you $500 investment. And those shares went to 350 in March. And you sold. That's a $2,500 gain, right? So now you have $3,000 total investment capital. And then you'd bought back in, at the lows of that cycle, which were around like 112 after earnings, I think we saw. And then, sold again in June at 350. And then bought back in at 140 and sold again in August. You'd have had money for covered calls, and you'd have had shares for covered calls in no time. Straddle SQQQ tomorrow for Microsoft Google earnings. Could. I don't know if the upside's that strong on them. Why straddle it when really you're making a short bet, right? Can you turn this hindsight into foresight? I'm trying to. No one can time peaks and lows in the way you're describing. I mean, you can. That's what people have been learning how to do in here for over a year. There was a point, we didn't know it would cycle. Every time it went up, we thought that was it. As time has gone on, our understanding has become better. Retail is MOASS. Remember that? They are. If they'd bought when the pressure was high. But they've never bought again in the numbers they did last January. They've never had the confidence in the position ever again. At no point was retail interest as high. I think the most important thing I've learned through all of this is you never go wrong taking profit, and there will always be another opportunity. Holding out, hoping this is the big one, will fuck you over almost every time. Yeah, usually. Sometimes they really are. Sometimes they really are the big one. And GameStop is valuable enough. The underlying potential of the company is good enough that it's worth being in on. It's worth just investing in or trading in, and just being exposed to GameStop is profitable. It's a tough subject to talk about, I know. And it could, you're right. It could unpredictably gap up and take off to the moon, and maybe you miss it. But what do you miss if it never does? And this is something that's plagued all of the DD writers and the quants for months and months. As are you hurting people by showing them, the potentials and not showing the reality? Like, if the potential is MOASS, but the reality is the cycle. What do you express more interest in? Where do you push your research? If you say this will never happen, which isn't true, it could. Even Gaff holds his 5 shares because it could happen. Right? Then the interest is gone, and the potential for this to generate wealth for thousands of people is now off the table. So there is a benefit to both, because they're codependent. One, without the potential for MOASS, this reality of the cycle can't exist, and vice versa. If you knew it would go from 39 to 350 and then down to 112, you absolutely would have done that and made insane gains. But you had no clue, and neither did anyone else. I know. But we do now. We understand. We're able to not only not only predict the price range almost on a daily almost on a daily basis with a pretty low fucking margin of error. We're also able to time the tops of the runs. We're able to see when, gamma maximum has been crossed. We know when gamma neutral spikes, indicating the end of the run. So not only do we know where the run's potential is going to be, we know when the run has peaked out and when we're going to start to see downside. I mean, the predictability of the stock is unheard of in other assets. I mean, there is a roadmap published every day, essentially by me and others, on what GameStop is going to do, and and we're not really very far off. After the defeating of the potential for the FTD anomalies, that was it. We're in the quarterly cycles, and we know now after February that they can kick them out to the S&P index rebalance. And other than that, that's it. It's locked in. So there's a month of wiggle room for them to slip some of the obligations. As long as they keep creating them, money keeps being made. Will they continue post split? We don't know, but we'll be watching, right? Its unheard of predictability is because of its wild manipulation. But that's part of that manipulation is because of buy and hold, right? So buy and hold works because the stock is super volatile, because so many people are holding it. And so they're incentivized to continue making money off of the volatility on GameStop because it's super illiquid and volatile. Why would they not make money on that? How often do you have the entire float owned by retail? And not only that, 10 million shares off the table, locked up and guaranteed not to move because it's profitable. That's why they continue to create obligations, because they're short volatility. So they can not only can they create the volatility when they need to, they can make profit off of shorting it on the downside. So they can hedge the upside and profit on the downside over and over and over and over. You get a short a stock at, 200, 250 every time, and buy back in at 100 every quarter. I mean, imagine what that does for your shareholder report if you're a hedge fund. It's like, oh yeah, we picked up a cool $1.5 billion over here on GameStop this quarter, and this quarter, and this quarter, and this quarter. Yeah, they don't have to fear anyone selling. They don't have to fear that liquidity loosening up and ruining their plans. And it's a broader position. It's not just GameStop. It includes a whole basket of other assets that they do this on. GameStop is the one with the most interest and some of the highest illiquidity. I don't care if I'm the most hated person on SS. Been there, done that. I mean, really, the ETFs eat the losses, but they're making it up in arbitrage. So if we aren't seeing the levels of FTDs from prior cycles, are we concerned of a fake out this time or minimal movement, if any? I mean, yeah, but we're starting to already see put OI increase. As of Friday, put OI almost doubled from Thursday. So we're starting to see those obligations be created, right? But they took on a little more risk last time in trying to, defer the cycle by an extra month. They took on that extra month of risk and obligations, and so we had a more explosive cycle than we usually do, right? I appreciate your brutal honesty. Ever since I let go of hopes for MOASS, I've been cashing in hard. And if you have enough shares, you don't need to cash in at all. You can just stay long and profit off of the massively inflated volatility on GameStop. Because you know when the stock's going to go down. I mean, or trade flat. So after the dividend of a stock split and there's no MOASS, is it safe to say that it's not the play anymore? Play options or invest long because the company's making great changes. I think yeah. If we go a long enough period of time and there's no FTD obligations due to the split, then it's off the table. The higher liquidity environment post split after a given period of time is not good for the potential for a short squeeze. Same with AMD, right? You know, AMD has 500 million shares, and we know it's never going to fucking squeeze. There's not a mystery here, and I think the only people still hanging on to all of that is people who just don't understand what the fuck's happening. I mean, once they started breaking GME FTDs up into multiple ETF CNS channels and laundering those FTDs, that's what killed the potential for the squeeze. That and the share offering. Ryan Cohen needed the money. He needed the money to build a better company. He's doing what's good for GameStop. But I don't think he was ever in it to make everyone multi-millionaire overnight. But if you buy GameStop and you build your position and you build your long position, and he really does turn around the company and do the things that it has the potential to do, then he will make you a millionaire one day. And if you truly believed in the value of GameStop, that would have been the only reason in buying into MOASS in the first place. Because you don't buy into dying companies because they're going to squeeze, right? You buy into good companies with the potential to squeeze.